and we're talking about new constructions versus renos. And you brought up a really good point. You brought up this like great point of view of how people, the question of new construction versus reno is kind of flawed, right? And it's based on this idea that people overvalue, they go through their decision-making matrix upside down. Can you kind of elaborate on that? So if anybody's thinking about this property.
Yeah. I mean, the current state of things for, let's call it average investors out there, which is not your average investors, is that they place an inordinate amount of their due diligence time focusing on the property. And it's, driving around properties and going through the property. And many times it's laboring over new construction versus renovations and all of this. And they spend so much time there. And then they largely make their decision on what they're going to buy. And if you think about it, when something goes wrong in a rental property, it's not typically that property. It's typically the management, the construction, the team that set up that investment, or it's the ongoing experience of owning that rental property. Your resident maybe isn't performing the way you want. Maybe you have multiple residents that come in and out. So what usually is the problem in rental properties is not the property, it's the team. And so, my point of view is that we need to flip that on its head. That decision-making matrix needs to be flipped. And number one, you should be spending the most of your due diligence on the team. And then once you find a team that can earn your trust and that you believe their numbers that they put in front of you, you need to understand the market that they're operating in. Make sure that's a market that you can profit from all 5 profit centers, including home price appreciation. Because again, home price appreciation repeats itself over time. And then if you do number 1 and number 2 well, you get the team and you get the market down, your property selection process should be simple, easy, enjoyable. And you don't have to labor between decisions like, oh, do I only need to invest in new construction, or do I only need to invest in renovations? Does it only need to be septic or sewer or whatnot? Those are important questions to ask, but not until you take care of the first decision, which is the right team that's earned your trust and that you can trust their numbers. And then again, the market. So, that was the big point. And as it relates to new construction and renovations, I find that a lot of investors spend so much time thinking about this, or some come in with really preconceived notions that new construction is the only way to go. And I can just tell you, as a rental property investor for 17 years, guys, I own over 300 rental properties. The majority of my own rental property portfolio is renovations. Like, I can tell you, and I get to manage over $800 million of rental property portfolios, and the vast majority of those are renovations as well. And our clients have earned 79% more than your typical Jacksonville investor. 100% of our clients have beat their return on investment expectations, and the vast majority of it is renovated homes. So, that I can tell you that just the picture and the emotional appeal to new construction is not the reason to make that decision. Renovations and new construction, I'm agnostic. I love them both. And so if you're faced with a decision of a rental property that can perform, can beat inflation, can mitigate risk, it checks all the boxes off. Like right now, this home is rented ahead of time, checks off that box right there, right? You should totally be open to a renovation, just like you should be open to new construction. The big question is, can you trust the team? Because the construction, people are concerned about whether or not this is going to have more maintenance costs. Is it going to have more ongoing maintenance costs? And that comes down to your team, right? If the team has renovated the home to a high standard, if you trust them, if you've done your due diligence there, then you've checked that box, right? And then they should have an expectation of ongoing maintenance costs for your renovated home. It should be slightly higher than what a new construction home is, because that's just real. That's what the data supports. But that's okay for it to be slightly higher and still be a good deal for a renovation. So, at the end of the day, you get to that same IRR, you get to that same return on investment. Putting it another way, if 17 years ago, I was like, you know what, I'm only going to invest in new construction properties, I would not be where I am today. Sure. Yep. So, and then the other thing is, some people get so excited about new construction, and you're going to be a client for 10 years, 20 years. I can tell you, you're not going to refer to your property as new construction in like 2 years from now.
Yeah.
You know, it's not called new construction after the year that it was built.
Yeah.
So like, don't put so much weight in it being new construction. It just doesn't equate to your best risk-adjusted returns.
I can tell you that I feel, you know, for what it's worth, I feel fortunate that I never had to unlearn any of that stuff, right? Like I've been educated through the school of the Not Your Average Investor Show first, and then everything else has come. And when I look at these properties, you know, I've very much internalized that idea, right? I've internalized the idea that it's about the team performing. It's this idea that I'm not gonna, you know, in 2 years, if something is kind of like gone wrong in a property, when I'm sitting there with Marta, my wife, I'm not like, but babe, it looked really good when we bought it, or we got a really good deal on it. We should stick with this experience.
Right.
It's always been like, in JWB, I trust, right? Like I have seen the guts of this operation, and I know the way that this is run. And I really, really believe that all these numbers are true and will normalize for the long run. So let's stick with this and not lose out on home price appreciation and on debt pay down and all that stuff. So, and I've already decided that Jacksonville is my market because I know that it's got the high growth. I live here. I see all the things that are happening. I know the urban core is coming online. I believe we're going to beat expectations in my own things. I'm not making you overpromise, underdeliver anything. And for me, it's really been about this. It's been about the IRR, and it's been about the purchase price. If, you know, as I looked at my decisions of buying properties, I wasn't thinking new construction renovation. I was thinking, is this IRR the thing that I believe is going to happen? And then is the purchase price, you know, how much money do I have? How much do I want to put into this asset class?
Mm-hmm.
I can tell you my first two, I want as cheap as possible, right? Like, because I wanted to get in. My last one, I remember having the decision of a home that was worth this, right? It was $225,000, very similar to this, versus a home that was worth about 180.
Mm-hmm.
And I was just like, you know what? It's still in the moment where I want to like, you know, I still want to be pushing my chips into this part of my portfolio, this like risk mitigated long-term growth stuff. So I decided to go for the higher price point, but at no point was I thinking renovation or new construction. I was just thinking, how much of my chips do I want to push into this thing for the pie that I want to bake?
Mm-hmm.
And I really think that as you explained that in the class that we were teaching, it made perfect sense to me. This idea that new construction, renovation, if you trust that, you know, if you're here, you're obviously looking at a JWB property. If you trust in the JWB team, you believe that this IRR is going to happen.
Yeah.
And therefore, if this price point is like at the price where you have, you know, the chips to push into the table for it, go for it. If there's like a higher price one and you want more of your portfolio to be rental properties, then go for the higher price point. If you have maybe 2 times this money, and that means you can buy 2 of these versus one higher price point and something else, then buy 2 of these. But I just don't, you know, like based on the education that I've gotten here, it's never been new construction or reno. It's literally been IRR and piece of pie.
Yeah. You're thinking about it the way that I would hope others would too. It's the way that I think about it. And it starts with the trust that you mentioned. And then guys, you know, this IRR that I put in front of you, I'm so confident that I'm going to hit it for you because I've hit it for 100% of our clients that have been investing with us. So if you're concerned about a renovation and you're like, oh, well, I don't know if the maintenance or whatever, like that would be caught in that 100% figure somewhere,
yeah.
Right? Like, I'm not saying we're perfect, but I'm saying that as a steward of your money, we've had 100% success track record.
Yeah.
You know, and so that's why you can trust us. That's why you can trust this evaluation. That's why you can trust it, whether it's a renovation or a new construction. That's what it comes down to.
All right.